Good day, fellow investors. Yes, the stock market has crashed this year. The Nasdaq is down 29% from the start of the year. The S&P 500 is a little bit better, 17% down. China internet shares are down 77% over the past year and a half, and also 62% down over the past 5 years. This is a real crash, capitulation there. We have Bitcoin 73% down over the last year, and keep this in mind, November 13, a year ago, Q3 2021 will be very important for something later to show you the behavior of people, and even Tesla year to date is down a staggering 52%. So yes, stocks have crashed, and what is happening is that people are leaving investing, which is not the best strategy when it comes to accumulating wealth over time. Because when something is on sale, the best strategy is to buy that thing on sale, not at full price. My wife always likes to tell me the best investing strategy, and she is 100% right with it. If she wants to buy me a sweater like this and the price is $330 or this overshirt, she waits patiently because she knows sooner or later all of this will be 40% off, and then it will cost $198 instead of the $330, and then she will say, "Oh, I bought you a beautiful sweater and I made money today. I made $132. And that is the best investing strategy out there. And when it comes to the stock market, people do exactly the opposite. And this is a chart that really destroyed me. This is the number of monthly active users that have opened a Robinhood app on their mobile phone. And you see here Q2, Q3 2021, remember Bitcoin and all the other things. The number of monthly users active for Robinhood has crashed 50% almost to 12 million in the last reported quarter. So 50% of all those people that were investing when stock prices were high, as the market peaked here, all of those have left investing, accumulating wealth. This is the wrong strategy, and most people use the wrong strategy, which leads to the following. This is practically the most important chart when it comes to investing, and I'll make a special video on this. If you look at the 20-year annualized returns per asset class, the S&P 500 over the last 20 years has done 9.5% per year. However, the average investor has done 3.6%. Why is that? Because when stocks go down, the average investor stops investing. And this was a perfect example of why the average investor stops investing from the Venetian Doge of taxes or someone dodging taxes. I think the biggest thing bogging down investors at the moment is macro. Most people are unsure about factors such as rate, inflations, etc. I'm hoping these things start to clear up more coming into 2023, but value will always be value. That's correct. But when those things clear up into 2023, value will be gone, will be more expensive. Of course, if those things clear up. But it might sound strange, the best time to invest is at a lower price than at a higher price. So if we just take a look at Tesla, it was better to invest at $28 at the bottoms of the pandemic crash than 2 months earlier at the top. Of course, the lower price is a better price. It was better to invest here in May 2021 than here, and better to invest here than here, better here than here, and that is the key of investing. The lower the prices, if you are an investor, the better your returns will be. And this is the key rule. The lower the prices, the lower is the risk and the higher is the return. And if you can understand that over your life investing cycle, which is the key here, not just I'm going to invest a little bit of money like most of those leaving the market now, those were simply gamblers, speculators, not investors. So what I do, I have a research platform. Here I have my own money that I manage. I'll start doing that in 2023 again. But I also have my model portfolio, which is in line with the research platform strategy and everything. And I'm fully invested in that model portfolio. Each month I add a little bit there and I invest that each month. There have been some dividends and I have bought more every month over the last few months despite the uncertainties. And I'm buying more, owning more businesses. And that is the strategy, and that is a strategy that should do good over time. And if we look at the investor government compound calculator, started this portfolio in 2018, a little bit more money, but then I adjusted something. So for the adjustment, it started in 2018 at 5,000 monthly contribution at 250 per month. It has been now 4.5 years, and let's say the estimate return rate at 13%, which is what I did approximately, and we are now at 25,500. So invested 18,000 despite the decline over the last year as for others. So for me, the portfolio is still doing okay, and the fact that all those stocks are cheaper now tells me that most likely the portfolio will do even better in the future. And let me just show you what these cheaper prices mean. So I've been doing this for 4.5 years. Let's say I keep doing the same for the next 25 years. And you can see here how after year 7, 8, 9, 10, those dividends, those good investments start compounding. And then there is a differentiation between the contributions and the future value. And you can enjoy this compounding only if you keep investing over time. As Warren Buffett said, you invest over thick and thin, especially over thin. And that's the key when it comes to investing, having a habit of creating wealth over time, and that is what leads to great returns. You reinvest those dividends, that starts compounding, and if you manage to make investing a habit, year in, year out, in good times and especially bad times, then you are a great investor over the long term and you achieve much better returns than anybody else. By investing when everyone else is running away from markets, from crypto, from everything, you avoid this losing investor mindset and you go towards the even higher than the market, because the market is this and everybody else. So you want to go on the other side of the curve. You want to be here when we are talking higher and higher returns for lower and lower risk. If you want investment ideas, we have discussed Amazon recently, we have discussed Facebook, and my mission here is to make investing more approachable to all people from a psychological and fundamental and accounting analysis perspective, to understand the risk and the reward at a certain point in time, and then to accumulate wealth over the long term. If you enjoy that perspective, subscribe to the channel, check my other videos, and I'll see you in the next video.